guys, welcome back to another week of Mortgage Matters in Minutes. I appreciate you checking in with us here, start of 2025. So, Merry Christmas, Happy Holidays, Happy New Year. I hope you're off to a great start, and we have some great news that came out in December. So, what happened? Basically, the word is getting spread as individuals are receiving their property tax statements that their property taxes have gone down significantly. And while we want to applaud that, and yes, that is a great thing moving forward, we here at Mortgage Specialists always are about providing the facts and want to get the facts to you about what truly has occurred and what is it going to look like moving forward. So, yes, first of all, LB 34 is a new state legislation that went through and passed, and it did lower property taxes. But the key to understanding this is you've already been receiving that credit for most individuals, that as long as you filed your property taxes on your income state tax forms, you have already been receiving that credit. So let's talk a little bit about this. In 2020, the law that was passed that created the tax filings on your state income taxes that allow you to receive a credit for a portion of your property taxes that comes back to you and to the taxes that you pay to the state. So most good accountants are letting clients know about this and staying on top of it. As time's gone by, I know there's been lots of talk through this last year of how home prices are expensive, rates are high, property taxes have gone up, homeowners insurance has gone up, and this looks and feels like an awesome thing. But not to burst your bubble, you've already been receiving this credit. But instead, we're receiving this credit now as you go per month versus the following year when you file your taxes. Most people don't know here in Douglas and Sarpy County, you pay your income taxes, or property taxes, sorry, lots of taxes here. You pay your property taxes for the 2024 year in 2025. This time of year, November, December of each year, you receive your tax assessment, which multiplies by your tax levy to calculate out what your exact taxes are. And many people are seeing this come back and are super excited that now we no longer have to file that tax credit. And monthly we receive that credit. And generally people's mortgage payments are going to go down. By how much? It depends on how much your value of your home is worth and how much it's assessed at. Because levies haven't changed, just our assessment. Actually, levy went down, assessment stayed the same this time. So that tax credit now is happening every month. Why do we want to talk about that? It's a very good thing moving forward because now buyers have less of expense. When we look at doing mortgages, we look at how much debt an individual has in relationship to their income. And now if they're buying a property and their property taxes are $50, $100, $200 less per month, that's more of a home price that they can afford. So that is wonderful to see among our real estate community because now it not only helps the financing piece, but people's budgets moving into it versus receiving some large check moving forward. So as a homeowner, pay attention to your statements coming out. See what that difference is. According to calculations here on a residential average of $100,000 home, or each $100,000 on a residential non-agricultural, you're saving about $119.83 per 100,000. For agricultural land, it's a little bit higher, 143.78 out of $100,000. So the entire state got a little bit of a break here per month as we're making our statements, mortgage payments. Our statements are coming out as well, and that's only going to be reflected once your mortgage servicer reviews your annual escrow account statement. So talk a little bit more here about escrow. You're going to see your tax statements come to you in the mail. They look like you're supposed to make that payment, but it'll state on there if your mortgage servicer is doing this already for you, then you don't have to pay, obviously, your property taxes. The servicer is going to do that. But the mortgage servicer only looks at your taxes and your insurance one time throughout the year. So that one time is generally about a month before your anniversary of when you took out the loan. That's the 1 year time frame every year. And generally it's the same month of each year. They're going to look at that to make sure there's enough money in there. And they'll say, oh, look, your taxes went down. Property taxes lowered. Let's collect less in your escrow account, which then obviously lowers your mortgage payment. So again, moving forward, we're excited for this. We wanted to explain it, that it's not a true cut per se. It's just a way of moving it. It's a wash, or moving it from a filing on a tax return to a direct impact on a monthly basis. You are already receiving the credit, but hey, let's make your monthly budget a little bit better here moving forward in 2025. We hope you're off to a great start here in 2025. I know it's January. It's the winter months here in Omaha, Nebraska, but make it a great one, whatever the year brings for you. We wish you all the best. Here at Mortgage Specialist, thanks for tuning in, being educated, checking us out. If you have any questions about your mortgage needs, feel free to give us a call at 402-991-5153, or check us out on our website at mtg-specialist.com. Have a great rest of your week. We'll see you soon. Mortgage Specialists. Driven, trusted, reliable.